Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
Welcome everyone to the midweek software strategy session. My name is Steve Vetterl. Today is the 28th, Tuesday. I try to do these calls at least as close to 10 a.m. as I can. I've been just going through, checking the charts and so forth. So if you guys haven't seen this, just go into AP Social. I do the comments and actually post the sort of notes, as I call it, anything else. I think the concern that we've seen, and I've just been sort of going through this back and forth, we have Chair Powell testifying the last 2 days, and there has been some real wrangling in this particular testifying. That coupled with the fact that we've had 2 Fed governors resign in the last couple of days due to what, in my opinion, is malfeasance in their own portfolio trading, has created some real unrest in the markets. So if you're just looks like a bunch of people are just joining us, equities are putting in a pretty big down day. I actually talked last week about this being a potential dead cat bounce back up, and now we're straight back down, testing some of these low levels. But usually in global sell-offs, we're certainly see down towards the bottom with the DAX and touching near some of these bottom levels in the stock 600, which is the big grouping of European companies, similar to the S&P 500. Just going through a lot of see what's going on in bond and equity land this morning. I unfortunately have a client who's passed away, so I've got to handle an estate settlement that I've got to prepare for. So I'm just going to make this this call a quick one. But one thing I do want to note is that towards last time we saw the dollar this high was it's darn near 11 months ago. So it's certainly something to be aware of, the fact that we have finally really poked up into an area that could be the final, how should I put it, ceiling of resistance before we burst out. It's possible. The other concern is that there's been a lot more, certainly in the Aero group, that has traded a lot of the indexes from a US 30 or an S&P 500 standpoint. And you really want to be careful down here if you're taking these trades, because some of these levels have been holding for quite a while and they may very well give way. I don't really have a lot of time to get into doing like a whole market profile analysis of just this movements up here, but looking to see where the support is, and we're clearly bouncing off it a little bit, but I don't know that it's going to hold. It may continue to get even more red today. A lot of people thought this was the rally off of the correction, and to me it just looked like the dead cat bounce. There was a shortable thing. Sure enough, when this doji showed up yesterday, another down day. I think a lot of this is just Fed driven. You know, it's almost like the market's beginning to see, well, maybe there's problems in China. Maybe the Fed is going to start tapering. It's going to send typically money into currencies like you're seeing here. Go back to the daily on the dollar. That's kind of where we are. Still this 94, 50, 70-ish area. This is it. This is the last area of resistance before potentially a move higher. So what's that going to mean to everything else? Everything else that's tied to the dollar looks like it's getting ready to break down. Just reset this. That's a little easier to see of the whole move since last summer of last year. We've been up in this area. Now we're essentially hanging on the edge of the cliff here, which really is this 1630 area. So we're not that far away from it. So the dollar really does have a protracted move higher, just due to global weakness and whatever, supply chains, costs, inflation, all that, all posing problems for the marketplace as far as getting business done. Also note that this is a much bigger move in GBP. It's almost a 1.17% move in the currency today in relation to the dollar. I mean, much weaker than the euro's move. So of note, and I'll take a look at GBP CAD as well before I take off here, but note this move down, kind of a treacherous situation as far as trading in the currencies in terms of just blindly accepting trades. And now if you look at the NEO currency, it's GBP CAD, we're below this level. We haven't seen this level since the 21st of July. We've broken down below, but notice we bounced. So maybe somebody's defending this area. Notice we're touching that green Bollinger outer band, which usually is a oversold sign. We've been one time framing down generally. And it's 1, 2, 3, 4, 5. Yeah, 6 days of downs a bit much. So maybe we'll get a little bit of a bounce. It's actually one of the few times from a daily chart perspective, if I'm trading intraday, that I will actually step in front of the train when you get these really outside moves, especially like right here. Notice we finished the day inside it. So taking these really outside moves is one of the super rubber band stretch times that I actually will step in front of the train. It's rare though. So let's take a look at US CAD. Surprisingly enough, not seeing as much of a reaction in this from a daily chart perspective. Let's see what else. USD, JPY of note. 1, 2, 3, 4, 5 days in a row of one time framing higher. So we've bounced off of support, and we have a move very similar to what we've seen here. Really surprising. But at the same time, we've had a good base building for quite some time, and now the dollar has all of a sudden decided to perk up in relation to pretty much everything. And that's putting pressure on a lot of these. The temptation always is to short these moves. In this particular case, we are really outside of a normal move. I think I can only see one. If you look at this entire picture, right, we're getting tighter and tighter. And one can argue we're coiling. One can argue we've just been balancing, building a base, sideways trading. But look how tight the standard deviation bands have gotten. Now we're above that. It's almost worth possibly a swing short. But it's tough if this had shown up on any normal day without a bunch of wrangling going on in DC as far as testifying and Fed governors retiring and all kinds of crazy stuff going on. I'd probably take a crack at shorting this up here. Aussie USD still within the range. Had CHF still within the range. Had JPY. Euro GBP. One thing I did want to note, and this is mostly related to the move in the pound. This is one of the bigger moves we've seen. mean, just look at the size of the candles. It's not like it hasn't happened before, but it's a pretty decent move to a rather boring and mundane currency pair. What else do I want to take a look at? Of note, gold. Obviously, the selling off in currencies putting pressure on this. Look how poor the silver chart's been, by the way. It's the easiest to see on the daily. You really got to look at a weekly. We're right at the edge on the weekly chart of this zipper-based move, which took place, obviously pandemic-related move, but look, that's a big move, and someone's defending this area, but this is not a good looking chart for the bulls in terms of silver. We may get out and visit this air gap move down here. Air gap, just nothing more than a single move that some other, more than likely a single time frame player took us through with a large chunk of buying. We have to get back down and see if they're going to defend that position from approximately a year ago. Look at the Bitcoinage. So goes equities, so goes the coin typically. So no surprise that we're seeing a sell-off. The ultimate support right down here, first area of support is the 37,300 area where we bounced off that. We give way to that, more than likely going to see the lows, possibly even lower. So I want to address Ethereum. Let's take a look at just the data. Let's do a weekly chart. Just this move up in this area. You could see the center point of all the volume is somewhere in the 3850 area. That's the ultimate support for this long term. This is just what's been built as far as volume that's executed on this summer. This is the center point of that. Essentially, the highest volume is typically a place that if we're going to have a pretty good correction, they're going to want to try and visit at some point. So until further notice, at least as far as I'm concerned, I'd be shorting bounces on this. I would not necessarily be taking lots of swing longs at this point until this plays out. All right. What else do I want to address? Do keep in mind, I post in the Market Watch community. I don't post on Telegram anymore. I think that that's pretty much all I wanted to say. Do note there's going to be 2 days of Powell testifying, and that, no surprise, we're coming into the end of September, end of the quarter. Q4 starts at the end of this week, so there is a fairly bigger chunk of moving around in portfolios, and that can bring more volatility to the marketplace. So with that being said, wish everybody a great week of trading. May the trades be with you. I'll see you all on Saturday.